Live. It is Wednesday, May 8th. We're halfway through the week. And we'll do what we always do, and that is start on the monthly. And as we can see on the monthly, really not much change. We're still remaining pretty much in balance here. We can see the current month's trading back inside the previous month's range. We've got these 3 months kind of clustered up here at the top. A level to pay attention to should the market catch an offer to the downside is this 9 daily or this 5 daily SMA or 5 monthly SMA, excuse me. That's that 5112, right? It just tends to be a fairly decent trend following moving average, as you can see, like over history, right? For the most part, if we're below it, trade a little bit higher if we're above it, right? But that's on a monthly basis, so but it's just something definitely you want to be paying attention to. Other than that, we've got our equilibrium up to the top, 52.41. You can see yesterday's close, the 52.13.75. We're trading a little bit below that. We got a little liquidation, right, which definitely wasn't unexpected, or shouldn't have been unexpected. So caught a nice move actually in a short right now. We'll see kind of how that plays out. Switching over to the weekly, you can see we're still developing this +4 week. We're trading 51.92. This week's open was 51.78.5, so we want to be paying attention to that. Should we get below that, or should we get below this low here, which is 51.74, maybe in for a little bit of liquidation? You can see this week has a little bit of a gap below it, and then the previous week, which was also a +4 week, its close is 51.54.75, and the high was 51.66.75. So those are two key levels you should definitely have written down or placed on your chart, because they're going to be key reactionary levels should the market continue this trade lower. Another level here, we've got the 9 weekly. This is the weekly, 9 weekly, sitting 51.89. So we're basically trading right at that right now. So we'll kind of see if there's a little bit of reaction off of the open. Switching over to the daily, you can see the daily continues to one time frame higher. We've got two gaps here below us. A lot of information, and the real key here is this previous balance here. So we've got this previous weekly balance. We're in kind of this breakout look. So should there be a pullback down, right, that 51.50 that we've talked about, we talked about it on the way up, that if the market was able to establish and get some nice closes above the 51.50, and we should trade towards that 52.06. Yesterday we traded above that 51.11 and even to the 50. I think the high was 26. Let's see, high was 26.75. So a little bit higher than that, but it's since come back in range. So as long as we remain back below, I think below that 12.13 level that we talked about, the market could start to catch a little bit of a balance. You can see right now we're trading 51.93, so we're actually trading a little bit lower and kind of in that T2 range. So it'll be key to see if the market's going to find a bid. And when we jump to the profiles, I'll kind of explain to you what I'm thinking here as far as where the market could possibly find a bid. And if it doesn't, then kind of the ultimate destination there. Now, switching over to the profiles here, we can kind of see that we've getting this liquidation from the overnight session. We've got this T2 session here, really just kind of waiting. I don't know if I can bring it all back. There we go. So basically, and this was just lining up with my plan here. So for the most part, what you have here is a breakdown from yesterday's range, right? A lot of momentum buyers, I think, got stuck yesterday. You could see that there wasn't really strong buying yesterday because we have this poor high developed at the top towards that 26.75, right? The settle was 13.75. Basically what I'm kind of assuming, right, we got a lot of momentum to the upside, no continuation from buyers. Like we saw the previous day, we got that nice spike into the close. Yesterday, nothing really. We just kind of close overnight, pretty much trade sideways all night. Just started to break down recently. Had you been kind of paying attention, you probably caught a nice short like I did, from the 02 down to that 95, 90 area. It almost came down to that 88, which is kind of where I'm looking for it to buy. So I wouldn't be surprised, or I'm kind of looking for it to maybe trade down early and then get that one touch pop. If it starts to rally from the open, if we open, let's say we open 51.95, we start to just rally, maybe some opportunity there. There's still 30 minutes, so I'm going to be waiting until the open to really make that decision, because I want to see the reactionary, right? Typically, overnight inventory is fairly weak inventory, or not a lot of strong hands. People are willing to kind of cut positions or flip-flop very fast. So what I'll be looking for is that correction right away, right? And that correction right away would probably be targeting that 5200, but we ultimately want to see the gap fill, which is around 5206.75 or 5206, and that would take the market looked for acceptance in this upper distribution. So if you were to kind of smash these two together, and let's go ahead and just erase this. If you were to smash these two profiles together, you can see we do have a semi-double distribution, right? Remember, this profile on the right's the overnight profile. We could even just maybe just color it a little bit darker so it's pretty easy to see. Okay, so, or it's a little bit harder to see, but it's the overnight session, so who cares? But you can see this real double distribution that's forming here, and that's really going to be the key, I think. So you've got this kind of weak spot in between these two, which is like 5200 to 5206. Acceptance above that 5206 brings you to that 13, and then the market starts to probably get choppy in here. Same thing down here. If there's not a one tap bounce, I think, out of this 88 to 83 area, then we start to get choppy down here. Now, if the pressure continues, we could definitely start to see some downside movement. The NASDAQ isn't the strongest early on today, that's for sure, and kind of leading the pack to the downside. NASDAQ trading at its previous day's VPOC already, so wouldn't be surprised if we do get that push down there and then the market starts to chop. Now below, really below like this 75 area, we'll look for that gap fill, which gives us about 10 points there, but into this excess 62, and that's kind of where you'll look to see if the market can find any support. Now remember, we do have some very key levels down there. We've got the prior week's high at 51.66, the prior week's close 51.54. So should we get down to those levels, you may start to see a little bit of reaction, especially because anyone that got short from yesterday may be enticed, especially if they're short time frame traders, which it does seem like it because we don't have excess on the high. They may be enticed to kind of close their position. So any type of bid may cause a short covering rally from sellers that are short from yesterday's profile and give us the opportunity to kind of go for that gap fill. Now, although the market is trading down and we're going to open red with internals, it is important to remember the gap, right? So gap rules are in play. Typically, you want to go with any gap that doesn't fill, but you also want to remember the trend, right? On the weekly, we are one time framing up. On the daily, we are one time framing up. Monthly is in a balance, but we want to pay attention to that overall trend of the market, just because, you know, it can be kind of the driver. Now, the 5150, I think, really is the gatekeeper, and you can see it down here. It's the gatekeeper of this previous balance. So should we get back down to that and the markets start to slow down, we need to start kind of considering the possibilities of testing into this 24 to 5100 level, as there is a gap down there. And that would be kind of the last chance for a pullback buy. Other than that, if there is no buyers inside there, if they don't hold that gap, then the odds start to increase that we're trading down to the 50.0375. But that is pretty much it, right? And the importance of the plan has definitely been, you know, expressed and should be understood if you go back and watch the previous videos about talking about the acceptance above the 5150 and how that acceptance should trade us up to the 5206 based off of volume and distribution. You know, it should be more important than ever that you're actually making a plan and writing it down. And if you're not, you're really doing yourself a disservice, and you're basically planning to fail. So make a fucking plan or don't trade. And that comes with every trade, right? It should be a plan with every trade. No trade should be taken on the fly. If your plan is to take a trade here and it comes and sets up and you take it for 2 points instead of 20 points like you were expecting, now the market's 20 points away from where you were planning on originally participating, well, then you're going to have to make a new plan, right? That's just kind of how this works. Don't shoot from the hip, right? Not everybody's Doc Holliday. But other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. I'll see you guys tomorrow.